Angling Direct. And you asked me to look at these last week. We've had results out. And I've got to say, they shot up from something like 110 on the MicroCap League straight in to like number 40. So we know, by the way, there's an update coming where there'll be a column showing you where last week's position was. So you can see, and if it's in blue, it'll say that's a riser. If it's in red, it's a faller. And if it's black, it's stay where it is. It's like the charts. Remember? Up 5 positions. This week's number 5. It's Angling Direct. That kind of thing. It went from like 101, something like that, triple digits, to rank 21. So Angling Direct. Share price, 36 pence. This is final results come out, recently. So what is it? Final results to January the 31st. So upside, the broker's giving 41. It's a 27 million market cap, 11 million enterprise value. Oh, they got a lot of cash. Plenty of cash. So net asset value per share, 65 pence. At 36 pence. Already you can see this is good value. The volume is not very good. Operating profit, yes, 2 mil. Cash, 15. Okay. Hang on, let me just hide the front bar. No debt. Operating cash flow, 6.4. Free cash flow, 3.5. I don't think there's a dividend. Just check. I don't know. I don't think it was. If it wasn't updated. But look at this. We pretty much got. Oh, can you see what I see? Can you see what I see? Growth, value, momentum. And this is based on the latest set. This is what I'm talking about. This was based on the latest set of results. Growth, value, momentum's not there. This could be just a technical recovery, not a fundamental and technical recovery. But you have to look at the outlook. The only problem, it's an online retailer. It's a retailer on stores as well. So efficiency margins are not going to be that good. Okay? But nevertheless, a growth up 10% in a cost of living crisis. But everything else is improved. Look at all the green on the screen here. That's all good. Efficiency, there we fall down. Gross margins 30, 2.4, 4.1. It's above a 15 moving average. The broker give it 41% upside. Okay. I mean, it's healthy, no debt, plenty of cash, loads of cash. They're reeling it in. A big net reeling in the cash. And literally, they are. Let's look at the broker targets. So, in fact, did I look at this? Yeah, pretty much 10% growth overall. The margins improve a little bit. The EBITDA grows, but we got margins there, around 10%, 5% there. So it's all right. I mean, I shouldn't queer the picture. I shouldn't convince you of anything at all. But let's have a look at the chart. What are you saying, ladies and gentlemen of the jury, of the stock picking jury, of the watchlist jury? What are you saying to Angling Direct? Is it one for the watch list or one to ignore? I mentioned this one last week. You did, Rich. I bought a few this weeks ago. So I guess there's a yes from me. Yeah, Harris is in there. He's picked it. He's caught it. He's got a hook into it. All right. Graham says, and no. Daniel, no. Ed, no. Ang, should be a steady riser. Yes, Darren says. Yes. Simon says no. Brian says no. Tom says, not yet. Not a big fish for me. There we are. Maybe that's it. Uh, Mark says, yes. I think, do you know what? I think there's definitely a trade in here. Sorry, Rob. Rob is saying, Ryan, Mark, yes. No, Rob, not a big fish fan. Sorry. Ryan, don't think it has enough growth. No, big risk of needing a float. Hey, hey, hey! No, literally, it's it doesn't need a float, does it? It's looking very good. But look at this. I think the trade was down here, a bit cheap down here, but do you know what? I don't know. Is anyone selling here? Because let's have a quick look. Final results, investor presentation. We see any holdings? Holdings. Hang on, let's look at this. Holdings. Kelso Group. I know they've taken the position, 3%. When they did it on the 20th of just back in November. There was no dividends paid, recommended, or declared during the current prior. Why? How much cash you got? If they want to attract some investors, they got loads of cash. If that's what I want to do, check a dividend. They're not losing money; they're making money. So they made, pretty much EBITDA 5 million, 1.5, and they got a cash pile there of 15 million. Pay a dividend for heaven's sake. What's wrong with you? I think they pay the dividend, like, 3, 4, 5%, and or even just say for the first year, say 10% dividend, reel them in. And then say cut the dividend. No, but that's what they need to do is pay a dividend, isn't it? It's good cash though, yes. And indirect sports and indirect, yes, Tom. Sports direct. That's yeah, I wouldn't say Mike Fraser maybe hooking that one because plenty of cash. Over it. Most stuff he buys, let's be honest, is hemorrhaging cash. He could do with one that's making cash to go to cash pile. Don't understand his system there, do you? It's a weird, wonderful system he's got. Seems to be working for him. Probably want to pay themselves more. Buybacks. Yeah, 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 probably. Okay, so that's an indirect. It's largely, yes.